The next hour or so, we're going to spend talking about the future of retail banking, where that meets fintech, and what the opportunities are there for collaboration as well. And so this session is going to be split into two parts. For the first 10 minutes or so, I'm going to present some research, the main findings of some research that the Economist Intelligence Unit has done that was sponsored by HP, looking at the future of banking and the disruption that's been brought by fintech. And then we've got a wonderful panel of guests here that are going to sketch out some of what the future will look like. And again, some of the opportunities, and give really good practical examples of where fintech and banks can come together and work together. So with no further ado, just one final point. This is a strategy session. The aim here is to get all of you involved as well. So we really want to tap into the knowledge that we have in the room today. So all these guys are used to talking and hearing their own voice, and so am I. But we really want to hear comments from you. If you agree with anything that we're saying, if you disagree, that's even better, because we like to encourage a vociferous debate here. So first off, the findings of some research that the Economist Intelligence Unit carried out back in June. So we surveyed, this was sponsored by HP, we surveyed over 100 executives in the banking industry and over 100 executives in fintech as well about what they thought the future of banking would look like. And we came up with some very interesting results. So this report is actually available on your phones on the app that you all now are part of and downloaded earlier this morning. I'm going to sketch out some of the main findings that we came out with. And just to start off on this one question, and this I found very interesting, because this to me tells me three stories. And the first one, if you look at when we asked both banks and fintech firms, is the fintech phenomenon overstated? And neither of them are in agreement with that. And that just tells you that there's a lot of verticals that have been disrupted by tech at the moment. And a lot of the dominant incumbents have their heads buried in the sand. And this is not one of the sectors that's happening in. That may have been the case a few years ago. It may also be the case that banks have been slow to respond, but they are very aware of the threat and the opportunity that's being provided by fintech firms at the moment. The second story that this chart here tells me, and this harks back to a point that's been made in pretty much every session today about the Uberization of banking. And what the people we asked thought is that that's not going to happen. So you can see down the bottom here, will traditional banks become minor players? Pretty much no one thinks that's going to happen. So this is not going to be the case of Uber. Nobody's going to be eating anyone's lunch here. Everybody that we spoke to thinks that the future is actually quite bright for banks. It may depend where you sit about what role you think they're going to play. And that was the really interesting part of this as well, because it turns out that the people that are most optimistic about the future for big banks are fintech firms. So if you look here, will banks continue to dominate? 1 in 5 banking executives thought yes. Almost half of fintech executives thought yes, that will be the case. So who's optimistic about the future of big banks? Fintech firms. So I think that tells several stories. It is, though, banks don't have their heads buried in the sand, but they have been, I think it's fair to say, slow to respond to this change. And there are several good reasons for that. And we asked both the banks and the fintech firms, what are the big barriers to entry for banks in this new, exciting disruption in the financial industry? And the same questions kept coming back up again and again. So you can see the response here from the bankers. And all of the green bars, these are the highest responses. All of the green bars relate to culture, relate to people, and relate to really just this sense that fintech firms are more nimble, they have the startup culture, and that's not what banks are traditionally used to, and they're finding that very difficult. The other two problems or barriers for banks were the legacy tech. That's definitely been an issue that's come up again and again, and also data security. So we're going to get into the conversation about all three of those challenges for banks over the next 45 minutes or so. And the responses were, again, pretty similar from the fintech firms. It was, again, this question of leadership and culture and people in the banks, and legacy tech and data security. So they were the real barriers to entry for banks. This slide here, we asked each of the respondents to name the strengths and the weaknesses of their own industry. So we asked bankers, what are the strengths that you have and what are your weaknesses? And we've got a lot of data here, and I'd encourage you to go through it bit by bit. It's very interesting. But the main theme that came out of this is that there's a real symbiosis here, where banks are strong, fintech are weak, and where fintech are strong, banks are weak. So even just looking at some of the headline numbers here, the main area that the banks are strong in, obviously, is customers, and fintech want those customers. And then also the full line of banking products that banks can offer, and fintech generally tend to be much more focused and more specific, but does that appeal to somebody who wants to get all of these different products under the same roof? And then on the flip side, for fintechs, they found that banks are constrained by this legacy technology, and they're much more nimble. They have this absence of legacy systems, so they can sidestep all of that and almost leapfrog it. And then again, the culture issue came up again. So banks have been a little bit more resistant to change, whereas for fintechs, they have this startup culture. And so there's really this sort of yin and yang. And for us, that suggests that really the future here is not that somebody's going to steal somebody's lunch. And this came back in the first survey findings as well. But rather that there's a lot of room here for collaboration. So where you're strong, you can bring that to the market. And where you think you can partner or acquire or just work in collaboration with other companies that are in the sphere that offer something that you don't, that opportunity is there. So that's what we were thinking, and that's also what our survey respondents were thinking. So what is the most important thing a bank can do to compete against fintech? And the answer from fintech firms, the majority of them said either partner with a fintech firm or acquire a fintech firm. That's unsurprising. And there may be some bias there in that a lot of these fintech firms may want to be acquired eventually at some stage. But we had a similar response on the bank side of things. So definitely we're getting the sense from this survey that the room is there for collaboration, and that is in fact what the future looks like, whether it's through acquisitions or partnerships. Finally now, before we move to the panel, with all of that in mind, we used some of the survey responses to come up with some of our own analysis as well, and kind of sketch out a few guidelines. If you look over the next 2, 5, 10 years, and if you think there is room for increased collaboration, which is what a lot of these research findings were showing, we came up with a few guidelines which you can see, and some of the best practice or best ways to approach this. And all of these factors came up as very important for all of the respondents that we talked to, some of whom already have a lot of experience in this area in terms of bringing together partnerships or collaborating. So including IT in the due diligence of any deal was extremely important. You want to get that front and center right at the start. You need to have that conversation very early on. Ring fencing the new culture. So we're going to get into this conversation about culture in the banks. And so one of the ways that people saw best to deal with this, bringing in the startup culture and wanting to maintain it, is to ring fence it. So in some ways, just letting, if you do acquire a fintech company or if you do move in partnership with them, letting them operate on their own, let them maintain the people, the leadership, the culture that they have there, ring fencing that. On the flip side, it was very important to bring fintech firms up to speed on regulation and data security, and that's no surprise given all the conversations we've already had today. And then finally, data integration was key, and the integration of enterprise infrastructures as well. So just to sum up, before we do open up the discussion, there's really quite a clear vision, I would say, being presented by the findings of these surveys. And that is one of a hybrid model where banks and fintech firms are coming together and wanting to preserve that culture of innovation. That was key on both sides, but marrying that with the resources that the banks have that the fintech firms don't yet have. And the end result of that would be to improve the offering to market. And a lot of these conversations, and we've been having them all day long, it's a sort of a who wins, who loses kind of things. Who's going to do the best out of this? Will it be the banks? Will it be the fintech firms? And to me, the answer is very clear, and it's neither. And the winner at the end of the day here is the customer, because they're going to get something cheaper, they're going to get an improved product and an improved service, and a more innovative product as well. So the winner here definitely is going to be the customer. How the banks and the fintech firms approach that is going to be the key to see who survives in the industry and who prospers. So with no further ado, I want to open up this conversation. Again, if you have a point to make, raise your hand. I will come to everybody for questions at different stages, but please just get involved, raise your hand, and we can open up the conversation. Let's start. Could everybody just please introduce themselves and maybe talk for 20 seconds about your current role and where you fit into this conversation? Steve, do you want to take the lead there?
Sure. I'm Steve Ellis. I was recently named Head of Innovation at Wells Fargo, and our focus is being the catalyst to transform the bank. over the next several years to remain, the number one bank in the world by market cap, I guess.
Hi, I'm David Snitkoff, co-founder of Orchard, which is a technology and infrastructure platform for marketplace lending. I oversee product analytics and marketing there, in addition to other stuff. And this is a pretty interesting discussion just because a lot of my own background is from working at traditional financial institutions and then taking what I and some of my partners learned in those places and using it to build a fintech company.
Hi, good afternoon, everyone. I'm Mike Nefkins, and I run HP's Enterprise Services Group. It's about 40% of the new company, focusing on enterprise. And I spent a majority of my career helping both traditional banks modernize, and now that I'm living in Silicon Valley, spending a lot of time with fintechs, helping them disrupt and helping them find a position.
Good afternoon, I'm Gavin Michael. Excuse me, I look after digital for Chase. So that means the .com properties, our successful mobile app, and the work we're doing as we continue to innovate across the digital customer experience in both traditional banking and in payments. And so if you're a customer of Chase and you use the mobile app, then I'm very happy, and that's a lot about what we do every day.
Super. So I'd like to start the conversation at quite a high level and then really get into the details and the sort of practical level. But starting off, does that vision of the future, is that what each of you are seeing? Do you see a lot of room for collaboration, for acquisition? What do you think is going to be the most important theme over the next 5-10 years in this retail banking space? Gavin, do you want to take off there?
So I think, we've clearly signaled through things like Jamie's shareholder letter and the like that we see Silicon Valley, we see what's happening. I think you're exactly right. It is a space where one is open to collaboration. The winner is the customer. If I look back at what we're doing, we're spending a lot of time building on that history of innovation and working closely in and around the ecosystem in order to continue to innovate around the customer experience. We have a long history of doing this, whether it be the first ATM patent, whether it be the mobile app that went into the App Store back in 2008. We're in Silicon Valley. We have a large presence there with over 100 people who are spending their days doing this sort of work. But in addition to that, we've also created the Financial Solutions Lab, which is in conjunction with CFSI, which is a $30 million commitment over 5 years, which sees us work with these companies who are looking to provide customer solutions around savings, around asset creation, around credit acquisition. And so this year we announced 9 winners in that as a way to encourage and build that partnership between ourselves and fintech. So we give them access to funds, but as importantly, they're getting access to our knowledge, to our networks, to our counseling to help them navigate through what this fintech world looks like, and how we continue to work.
So you see it as a win-win on both sides. Mike, was there any of the findings of this report that surprised you or anything that particularly you agree with or you're finding in your day-to-day role?
Yeah, so for us, what was really surprising, if you just take a look at the sheer numbers, right? The investment in fintech is about $25 billion in about 4,000 firms. That's a mind-boggling number, right? And all it really takes is a few of those to be successful to really disrupt. Now, what was really interesting is we didn't really find a single one that was a full stack, right, complete disruptor of traditional banking. Most of them are really targeting point solutions in payments or lending or wherever it may be. So because of that, we kind of came to the conclusion that we came to, which is it will be more of a hybrid world. It will be more of co-innovation. It will be more of the fintechs pushing and potentially partnering or acquiring with the traditionals versus someone really coming out as a clear winner from the fintech side.
David, you've worked on both sides of this. You've heard both of these, both sides of the story. What's your take now?
So you mentioned acquisition and collaboration, and I actually think those are two really different things. And big banks will always continue to acquire small fintech companies, and that's something you've seen for decades and decades. But the value of acquisition, I think, in the long run is at least going down or only relevant to certain firms. So only now does the technological scale exist to be able to grow a fintech business very, very quickly to something that has a very large customer base and very clear network effects, such that you don't actually need to be acquired by a really large bank to build a big, profitable, sustainable business. So you'll still see that happening, but the collaboration model, I think you'll see a lot more of, and there are great examples of that, whether it's Lending Club and Prosper partnering with certain retail banks to say, hey, there are customers coming to my retail channel that don't fit my underwriting criteria, but maybe they would get a lending club loan, or maybe there are customers who do fit my underwriting criteria if I'm a bank, but would never get them through my retail branch network, and there's a partnership there on the acquisition side.
So do you think that's specific to certain products, or do you see collaboration as probably the theme over the next 10 years? Are you a bit more bullish on that than you are on acquisitions? You think it'll be more collaboration than anything?
Yeah, I think there will be. I mean, I think you'll still see acquisitions primarily in the pure technology side, and if there are technologies that can be rapidly developed by a very small group of people focusing only on that technology, then acquisition, I think, in that case makes a lot of sense. If your business, though, is building a marketplace with network effects and you have your own relationship with a customer base, there's also a lot of value in that staying independent and then partnering with a larger organization.
So some of the issues or the challenges or the problems of collaboration, we saw some of them presented in the results. And the main one that came back again and again was culture. Steve, I want to turn to you because you're the guy working for the bank that's wearing the Birkenstocks right now. So you seem as well placed as anyone to tackle this question. How do you think banks can respond? How can they change their culture? They've been embedded in this industry for decades. How can they become more nimble?
You know, it's a really good question. And I think you come at it from a number of ways. So first, you got to come at it from the customer perspective. And my personal view from sitting on banking consortiums in lots of places that banks are very inward focused. They start inward and they look out instead of outward and look in. And I really think you've got to change that mindset. I've sat through many presentations where people say they're focused on the customer and it's a 70-page deck, and I find that bullet on slide 33 that says customer experience really matters. That should probably be the first or second or third slide right at the beginning, right? Because you got to follow your customers and where they go. I would say that part of, when you think of from 2008 to now, lots of banks have had their heads down, either because there was this big recession, they were working on a lot of things that were going on, a lot of regulatory things going on. But you got to get people to get their heads up and look outside, right? And look out to the horizon rather than down. And I think you make that happen by actually creating a much more of a way for fintech companies and other kinds of technology companies. It's not just fintech companies that matter here, cybersecurity companies that matter, biometric companies, all data companies. There's all kinds of stuff that really matter here to get more of a connection with your top senior executives where you're forcing them almost to be out in front, meeting these companies, watching how they work, doing what I call show and tell. Like we sit down, a small group of us with our CEO once a month, and we show him some of the cool stuff we're working on. And then we show him some of the cool stuff that other people have built, right? So he can see, okay, what should we be thinking about? That looks really neat. And when they personalize it, then I think that changes the way you approach these things.
So personalizing it. Gavin, I want to come back and get your views on this as well. So how can you make that run through the company? Instead of having just one part of the company that's thinking creatively and trying to manufacture that startup culture there, how can you make that run through? Because there's more to it than just taking off your ties, and you've got to really change. I mean, that's a generational thing, no? Is it possible?
Very nice.
So I think when I look at what we've done over the last sort of 2.5 years since I joined, to Steve's point, we've put the customer at the center of everything we do. We've started by how does this work for the customer? How do we take friction out of the customer experience? A little bit to what David was saying as well about the respect of being very focused on these thin slice problems. How do we make sure that it's easy for our customers to get balanced information on the run? And introduce features into our apps and into our websites that allow them to do that. But to drive change is more than being able to put out a great customer experience. What we've had to do is build an organization that really is focused on change. The first time we put the mobile app out in its new form in April of last year, it was done in 100 days. You talk to anyone around a table, seeing a bank put an app out in 100 days, that sort of creates some raised eyebrows. But what it was an absolute focus, and this is something we learned from looking at the fintechs, is absolute focus on being able to achieve that goal, and everyone rallying around the purpose. So it didn't matter if you're a business folk who understood how account balances got dragged into the mobile app. It didn't matter if you were a designer. It didn't matter if you were a technologist. We adopted all of the Scrum and Agile technologies front to back to really start to think differently. Now, that's easy on something like an app.
Yep.
But then we took it and we've done the same thing as we've gone and refreshed our homepage, and now we're doing a lot more exciting work behind the login as well. And it really is about getting those small wins on the board quickly, showing and listening to customers, breaking that focus that we're inwardly focused and becoming outwardly focused, to Steve's point, working with our customers, listening to what they're saying, and then building our products and our services to match those expectations.
Mike, I see you nodding your head there.
Yeah, I'm really thinking about the cultural piece, because it really is a big cultural change. And what Gavin is saying here is exactly, the value of these big banks is they have that interaction with the customer. But I think the cultural change needs to go, well into the, right now there's still a belief that everything needs to be owned, right? Big banks are building. I just saw a bank build a $500 million data center.
Yep.
Right? They're still wanting to own everything. And the fintechs think completely different. They don't want to own anything, right? They just want to try to figure out how to get that customer experience. So that's going to play itself out over the next 5 or 6 years. And I think, to me, the traditional banks that let go of some of that and focus on, the customer side of it and listening to the customer and, how to make those apps, agile and, go from the 100 days to the 5 days and get the changes in, are the banks that are going to win.
Right, and this leads us into another point that came up again and again and again, is this issue of tech, this sort of tech infrastructure that the banks have that's really legacy sort of stuff, and it slows them down and means that they can't do things that fintech companies have. How do you see that changing over the next 5-10 years? Because this is somewhere that HP must be very involved in.
Yeah, a majority of the banks still are running 1960s mainframes, right? Because of the high transaction volumes that are out there, and there's really. We were talking about Steve and I earlier. I don't think in the next 5 or so years that's going to change dramatically. Now, what can change is what sits on top of that, right? Is how banks are going to utilize their data, how they're going to utilize analytics, and how they're going to get value out of that data to give the customers what they're looking for. So that's my view. I mean, there are some banks that are aggressively trying to get off the mainframe right now, but it doesn't solve that data issue or that front end issue yet. So they've got to do both. And so I think that'll happen. That'll play itself out over the next 5 to 10 years. But there's no getting rid of the mainframe in banking in the next year or two, especially with all the regulatory pressures and the cost pressures, and with the investment that's being needed to be made in cyber as well to make sure that banks are resilient and protected.
Yeah.
I think that actually, on that point, that gets into a talent issue also, because if you're a big bank, if you're any company, you want to attract the right kind of technical and analytical talent to really accelerate whatever you're doing, and that type of talent wants to be able to use the latest tools, the latest technologies. Engineers always want to solve the hardest technical problem. And so you sometimes run into a situation, especially at a big company, where you have legacy tech, and now you say to people, okay, go, you have all this data. I mean, any bank has massive, massive amounts of data, but if you don't give people the most advanced, quick tools to use that data, then they feel frustrated and they can't do their jobs. And so I think there's a great opportunity for companies like HP or otherwise to take thin layers of technology and put them on top of all that data to enable much, much better analytics.
Yeah, and that's a good point. And this is also something that came out of the survey results, which was that banks were having a lot of difficulty attracting the right talent, whereas the fintech firms were saying they're inundated with resumes and CVs from banking executives that want to move into fintech.
Confirmed.
Yeah, I was going to say we all agree with that.
Exactly, we've got a working example right here. But David, I want to talk a little bit about some of the challenges that you face. We've talked about some of the challenges that banks face, but they also have a lot of natural advantages. They have a name that's been around for decades. How do you go about gaining the confidence of clients or prospective clients?
I think, especially in fintech, if you're developing a certain type of technology company, it doesn't matter as much. When you're handling people's money, it matters a lot.
Yep.
And there's the move fast and break things thesis in tech, and moving fast is good. Breaking things when you're dealing with people's money is not. So it's important to, one, I think having a background of the team, and one thing we have at Orchard is we have a very mixed team in terms of finance background and technology background. And as much as we are a tech company, we have real legal and real compliance and real data security and all that stuff. And that is very, very important to the idea of what advantages banks have. And we talked a little bit about this before, if you're a startup, if you're a fintech startup, whether Orchard or otherwise, and you're working with the big banks, I think it's important to understand what those banks bring to the table. There's a narrative or counter-narrative or something like that, everyone in a big company is only inwardly focused or only looking at the past, and that's not the case. I mean, I worked at 2 large institutions, and there are a lot of very, very smart people at all these companies doing great things. The question is just how can you actually partner with them and use your combined talents and combined strengths.
Mm-hmm. I want to open up to the audience now. Has anybody got any questions? We've got a mic there, please. Over here. Thank you.
Good afternoon. Eric Malfoy, Deutsche Bank. Quick question for you guys. Which industry historically do you see as an example of where partnerships have worked versus pure acquisitions? Because we've been hearing a lot about partnerships and how that's going to work, but historically, as I think back, I don't come up with a lot of examples where that has been the model.
Yeah, that's an interesting question. And will it just be a case that the banks co-opt the fintech firms eventually? Any examples of industries that you think the banking sector could follow a similar path to?
Sure. I'll take a shot because no one else wants to. I can see that. I think oil and energy has been a place where you see a lot of partnerships in how development and energy production is done. And it works pretty good. And actually, I'd say those are very high tech savvy companies and suppliers that work. And I think that whole supply chain is where you see it. You could probably, now I'm thinking about a supply chain, and you think of how things actually get done, like with an Apple or someone, and how they make things like this is another place where you can see it. I would say, though, in banking, like when you think of processing and merchants, and there's a lot of partnerships or joint ventures that have happened. I think with probably mixed. Sometimes they work really well, sometimes maybe less so. I think the biggest headache, this is my personal view with partnerships, is the longevity, what happens over a longer period of time. It's pretty easy up front. We all agree, right? We agree to work together, right? 3 years later, he's gone. There's somebody else there. Their motives and desires might be a little different, right? And then you're getting into contracts, and then the lawyers get involved, and it's like keeping the focus around the customer gets harder sometimes over a longer period of time. So I think really how you have to be, I think, very deliberate and thoughtful about what kinds of partnerships you enter into.
And it's clear that they work best when the goals are aligned. So when it looks like we have goals that are competing, then clearly the partnerships don't work as well. So I think when you talk about some of the examples, whether it be the oil, energy, farmers, another place, or into supply chain links, goals are highly aligned, so things tend to have that longevity. Where we run into conflict is where we start seeing goals that become competing, and we lose sight at the end of the day that we're there to serve the customer.
We have another question here, and then one here, please.
Okay, Catherine Hires, journalist. It appears that many fintech companies shift any risk to the customer. There's no risk retention or little of it. I'm just wondering if at Orchard, for example, do you think that there could be a backlash at some point where your customers or the regulators will force you to have more, retain more of the risk? And then secondarily, will Wells Fargo ever allow their employees to engage in peer-to-peer markets at all? I understand that you prevent them from doing it. Is that ever going to change? Will the innovation group, push to change that?
I'll take question 1.
Thank you. How about we switch?
That was
Great.
easy, yeah. You guys are already working together.
Look, I think the antidote to that sort of risk retention backlash issue is transparency. And someone actually said this very, very eloquently on another panel before. Any time where you've had misconduct, fraud, anything like that, it's been because of a lack of transparency. It's because people didn't understand who actually held the risk and what was actually in whatever deal you bought into. So whether a fintech company is holding the risk or a bank is holding the risk or an investor or a customer, whoever, someone's always holding the risk. But as long as everyone who's a party to the transaction understands all the data underlying it, then I think we're okay. Where you go wrong is where there are missed expectations of who actually owns the risk and where it sits.
That's an interesting answer, and I think we've heard this question today about what happens when we have the first crises that hits the fintech industry, and that's quite an optimistic view in advance. But I will be curious to see what happens when when that does happen. The second question, Wells Fargo.
Second question. So. Yeah. I don't know why you didn't take it from me. I think, we've been doing a lot more work with things like crowdsourcing and crowdfunding over the recent several months. And actually, I think more back about a year on other things that were, let's say, like around hackathons, protothons, things where you're trying to engage more people. And I think you're going to see us open our eyes more and look outside because I've been saying this for a while. People, what they do in their own lives, it's what they should do, right? And we all should be open to that. And the second thing is, I know that, and I think everyone would know, probably any company here, the smartest people in the world don't work in my company or his company or The Economist, although there are a lot of smart people at The Economist. I love this magazine. I read it all the time. And I think opening yourselves up because there's more stuff to gain, to learn who people can help you solve your problems and help you think of solutions is the way to go. And I think it's got to go bi-directional.
I think we had another question over here as well. Feel free to get involved, folks. Your microphone here, yeah, thanks.
Thank you all. I'm John Statler with PricewaterhouseCoopers. I guess the street is very good at measuring success, but if you look at innovation, how do banks measure what is successful within either their innovation group or the digital group? Just trying to think of what are the kind of new measures of success there.
So certainly from where I sit, measures are going to be more traditionalist than you would think. We look at what the customer feedback is, what our net promoter scores are, what the ratings are of what we're doing. But more importantly, we look at how deep the customer relationship as well. So we look at customers who are engaging with us digitally. We're more likely to be their primary bank. They're less likely to attrite. They take more, afford themselves more of our services, particularly our self-service. So when we go through and look at the metrics that we assess, it's not just, we have 22 million mobile customers. It's what are they doing, how do they feel, and how does their relationship develop with us as being that financial partner?
So I got a couple things to say on this one. And there's an old Bob Dylan lyric. There is no success like failure, and failure is no success at all. I think once we realize it's okay to fail, that will be a big success. I think it's hard for a big bank to be okay with that. I think generally we've had, when we think of a pilot, that's really pre-production. I think we got to be able to try and test and learn and kill things, which I don't think is something that has been part of our DNA as much as it should be. The second thing, and I think he was hitting on this, which the most important thing is, what are your customers doing, right? Are they happy? Are they doing more things with you? Are you getting more complaints? Where are things going? Are they asking for things that you haven't done before or that you should do? Are they telling you they're getting it from somewhere else? So that customer voice, uncoupled with it, the internal voice that says it's okay to fail, and then this customer voice that's always in your ear are the two most important things.
Steve, just following up on that, trying to make it okay to fail, what's been your experience? Because you're not on the outside looking in, you're working for Wells Fargo.
I just don't tell anybody when I fail. That's how I do it. So in all seriousness, this is it's a very big thing, right? When you think banks, we have big teams. They have a big team. We've got a big team. We're doing lots of things. Some of those things should stop, right? And it's hard for us to stop. And your budget's only so big for what you invest. And I really think it's that rationalization of where am I getting the most out of the dollar relative to what matters to the customer? And I think sometimes that gets lost in the equation. So, we've been going through, I'll call it a rationalization of what really matters, and then this was a few years ago, and then repointed things and stopped doing things that we knew we should stop. At the same time, there's some things that are very obvious to us today that we've got to gear up for and should have been gearing up for, and now we take, repositioning people and moving them around. I think it all goes back to I'm looking outside now and I'm listening to the customer, and that helps redirect things.
Right. I want to bring it back again, if I can, to this idea of collaboration, because I want this to be quite forward-looking and I want this to be quite practical. And Mike, I'd like to bring you in here. So for HP, do you see this as an opportunity or a threat? Because there's both there, I can see, but net, what are you looking at here? Do you see, when you're trying to marry these sort of very old tech systems with these very new and nimble ones in two different types of organizations? What are you thinking? How are you looking at that?
Yeah, and this is the big conundrum, right, for any firm that's been around a while, right, which is, how do you wind down, the traditional stuff you're doing and at the same time be able to build up the new?
Right.
And be able to time that with street expectations and everything else. So it is very difficult. I mean, what we're learning about it is it's all about, I think we mentioned earlier, it's all about cultural shift and making sure that it's okay to fail and to cannibalize, the old that you have and bring up the new. So you have to incentivize teams differently. We are incentivizing our teams to run down revenue in our old areas and shift it over to the new. That's a different way of thinking. The other is all around skills. And we talked about skills earlier. At the end of the day, this battle will be about skills, right? How do the large traditional companies modernize the skill sets they've got, make it an exciting place to work, and ensure that people want to come in to help with that journey, right? So that's what we're focused on. And, we're finding, I think we've got a pretty good, setup to do that right now. But it is okay to wind down the old and bring up the new. And we're focusing the same on our customers.
Mm-hmm. I'd like to open up to more questions. Yep, can you have the microphone over here, please, at the front? Thank you.
Thanks. Hi, Jalak Jobanputra, Future Perfect Ventures. For those of you who run innovation labs, and I'm talking about externally facing, where you bring in startups to do pilots with, I mean, do you have success stories that have come out of these beyond just, say, pilot stage collaborations? That's the first question. And then the other is blockchain, and this goes along with the first question. But as an active investor in this space, I feel like every bank is getting involved with pilots. But how do you see that playing out in the major institutions in terms of when it will be something beyond just the pilot stage?
Can I ask also, what's your view? So on innovation labs, what's your experience?
So a lot of startups and portfolio companies get approached proactively by some of these labs because but they question what the real value is, because getting tied up in a pilot with a large institution can be a big time sink and a distraction, but it can also provide great feedback back to the company. And it's hard to know where an institution, especially ones that are running these for the first time or just finding their own way, and how much value it's really going to bring to this startup.
So you can see some benefits from it, but the argument hasn't been compelling enough so far. Is that fair to say?
Yes, that's why I'm asking if there have been success stories.
Good question. Success stories?
I'll start, and then you guys can do whatever you want. So whether it's a formal innovation lab or informal, I can go back to 2004. We were looking for a secure email solution. Two guys happened to walk into my office that day from a dorm room in Stanford with their dog. And they had some idea around secure email. They had no customers, and it was just them two and the dog, right? And it was thinking, okay. We were their first customer, and that customer went on to actually get acquired by a tech company, not a bank. So that one worked pretty well. We have our current lab. Part of the process in this lab is hooking up real people in tech companies with good ideas, fintech companies with real business people. Maybe it's around mortgage origination and improving that process. Maybe it's around authentication and biometric type authentication. And matching up these emerging companies with real business people, there's a lot of value there. When the companies come into our lab, we're not in it for the ROI, but we also spend a lot of time on industrial strength code, cybersecurity, because I got to tell you, most fintech, cybersecurity is not the first thing they think about, except for the fintech companies that are focused on cyber, right? And then we actually have a partnership, an informal network to help them figure out how to run their company and how they work. We're rolling a pilot out that authenticates you from the veins in your eyeballs is a current success story. So I think some of them work and some of them probably won't. But for us, I think there's a lot of experience they gain. I could gain.
We're in a similar position. I think to Steve's point, what's important as you go into these, that it's not a tech experiment. It's an experiment in how we're going to go after and solve a customer problem, whether that be at the front end in the way in which we authenticate, or it be around how we're going to generate new offers for customers. We'll run those pilots in a very controlled way with strong KPIs, understanding what problem it is that we're going to go after and solve. And in the process test, is it industrial strength? Is the depth there? Do we think it can scale to the customer bases that we look after? And I think the key in all of this is that transparency. It's laying down the metrics at the beginning. And when we view it, it's not just us wanting to innovate around new products or new offerings, but it's also bringing our customers into the loop early as well to give them early exposure to what we're doing. So we're able to feel early on whether we're moving in the right direction or not. So I'm with Steve. I mean, they're not all going to succeed, but those that do will be done in such a way that they will scale to the level we need them to.
Yeah, let me jump on that from a different angle. I mean, Silicon Valley is so interesting, and especially the labs that are out there. We'll look at HP Labs because we're focused there on so many different projects. And what we've seen, I'll give you a great example of one. We're focused on how can we take a technology from one industry and apply it to another industry, right? So there's also that cross-fertilization there. And a great example is we were working with seismic sensors around the earthquake that happened back in, what was that, 08 or so. And we've been putting seismic sensors on freeways. And we had an oil company come doing all kinds of data testing on that. And we had an oil company come through and look at the seismic project and say, I wonder if we took those sensors and put them down a well hole, would we be able to shorten the drilling cycle and finding the optimal way to drill? And they were actually able to take that technology and apply it to that industry. So there's so many different ways, and I think these labs where you've got multiple projects going on where you can incubate, I think are the future, because you're able to focus on a business problem specifically for an industry and have a place where scientists are working to cross-fertilize from one area to another. And that's what makes labs like HP Labs and some of the other labs in Silicon Valley really special.
Are you convinced? Possibly.
I'm glad we have some examples from Wells Fargo, but I'm still not fully convinced that, at least with some other organizations, that it's more than a PR effort around innovation, which is a buzzword these days.
So work harder, guys, is what she's saying.
Well, I'm not saying these guys. But it was good to see when it works.
Yeah.
But can someone answer the blockchain question too?
Blockchain, and then we've got one final question over here, and then we're going to have to wrap up then. Blockchain, anyone want to take it? Steve?
I think we're all looking at.
R3,
obviously, because it's very interesting technology. We're also tracking 600 cryptocurrencies. I'm not going to talk about cryptocurrencies, but the dark internet's an interesting place. I think the technology sometimes I think it's technology in search of something to solve. And sometimes I look at it and say, well, clearing and settlement, trading, I can see places where it can really create some trusted bond that didn't exist before in a very interesting way. So I think we're all kind of looking at it from that perspective.
Yeah, and I would add on that. So there's the technology in search of a problem to solve. So there's a lot of blockchain solutionism out there, which is, we have a problem to solve. Let's put it on the blockchain. Everything will be fine because that solves everything. That I think most people have gotten over. But it is very interesting, and it takes a long time for such a new technology to actually find the right use cases. So you could have an amazing piece of science, and if you read the original Bitcoin paper, it's a great piece of science, and there are tons of great applications for it out there, but it's going to take a lot of testing, a lot of failure, and whether you're a big company or a small company, you have to be willing to test a lot of things with that to get that thing to work. And I think in general, the idea of replacing a notion of trust in brands, trust in institutions with a trust in cryptocurrency or a trust in math or a trust in an algorithm that is transparent that everyone can understand is a very attractive proposition.
Yeah. All right, we've got time for one final question over here.
Hello. How do I turn this on? Is this on? Hi, John Edge. Simple question. Of the collaborations, what percentage of the collaborations have a social impact theme? Make a difference, do some good.
So through our financial solutions lab, that's the thesis behind the lab. It really is about working on that financial literacy, helping Americans, save better, build credit, gain assets. That's exactly the center of what we do.
Yeah, I mean, I think you see a lot of, particularly the larger banks, are very philanthropic, and they're out and focus on that. And partly because in the communities they live, it's a big issue, right? And that's where we want to be. So, but I would say when you think of collaborations, you know, that's we actually have a very large focus on environmental. That's a big deal. We actually have an environmental incubator, actually, and so I think when I start thinking of social issues, I go around and I look at, you know, there's the underbanked, there's the less fortunate, there's the environment. There's a lot of places where we can make a difference.
Super. All right, we've run out of time. I'm going to ask you all one final question, because the theme of this conversation seems to have been collaboration. And I'd love if you could give just some tips to any tech firms out there from your very different experiences and very different current roles. What's the one piece of advice that you would give to a fintech firm over the next 5 years? What's the thing that they should be thinking about front and center, or what have they missed so far that they should be thinking about? Gavin, I'll start with you.
You mean in the context of collaboration or more broadly?
Yes,
in the context of collaboration, I think it comes down to understanding what business problem you're solving, who the sponsor is, and making sure that it's scoped sufficiently that we can get a result out of any pilot or any work that we're doing together, rather than trying to go broad and present the solution as solving all our problems.
Super. Mike?
Yeah, I think that's well said. I think, for the fintech firms, continue to push, continue to innovate. I think we need that push in the industry to drive, I think, some of the changes in the traditionals as well. And then also, I don't believe that there will be a full stack fintech. So I think it is all about collaborating and finding that specific business problem, partner with the right people to go and drive a fix.
David, you sat on both sides of the table. What's your piece of advice for fintech?
I think if you're a fintech company starting out, you have to find a very, very important need out there, a problem that you want to solve, and focus on that and understand why you are uniquely qualified to solve that problem.
And when it comes to collaboration, what's your advice there when it comes to collaborating with the banks and with the incumbents?
I think it's actually the same advice, which is focus on what you actually bring to the table uniquely and what you want to get out of a partnership with a bank.
Right. Steve, final word.
Yeah, I think it's patience. When you're talking to a big company, because sometimes you don't end up in the right place, and their decision process tends to be a little slower sometimes. But I think patience and passion and commitment is important.
Super. All right. Can you all please join me in thanking our panelists? That was a great discussion.